We have a lot to talk about today, guys. Bitcoin hugging the 50-week exponential moving average and simple moving average band. Total market cap sitting literally right below its 50 moving average. And stablecoin dominance hitting that 8.78 level that we've been watching and looking for a rejection at. So many things to talk about today, guys. It's your boy, Jordan Cameron, back with another video. Pivotal point here, guys. Pivotal point. And what we've been discussing on the channel here is Bitcoin, how it could come back down and test that 50 moving average band again. But we do want to see this hold. We do want to see this hold. And that's kind of the line in the sand for us bulls here is Bitcoin holding the 50 moving average band. Now, as we discussed, the 50 moving average band is important. And are we still above the 50 moving average band for Bitcoin, despite what's going on everywhere, right? Despite the stock market absolutely capitulating. We got the SPY down 22%, officially putting it in official bear market territory. The NASDAQ down almost 26%, official bear market territory. But yet still we have Bitcoin sitting above its 50 moving average band. And I'm going to continue to talk about this, guys, and talk about our base case here, which is as long as Bitcoin holds the 50 moving average band, this is still my base case of a massive blow off top, which no one is expecting now, before then the giant bear market, which now everyone's expecting, okay? So my base case still is a giant bear market coming, but first throwing everyone and their mother out the lawn and getting the biggest blow off top that we've ever seen. All right. So once again, we're going to discuss about why today. We're going to do a review. We're going to make sure everything is okay and kind of go over everything. So first things first for Bitcoin, just to kind of, refresh. Why is the 50 moving average band important for Bitcoin? Well, in every previous bull market, the break of the 50 moving average band has officially meant that it's over for a while, right? It's sayonara suckers. Crypto's not going up for a while. Every single time, if we take a look at the past, that we've seen a break of the 50 moving average band, it was over for a few years, right? You didn't want to be in crypto at that point. You wanted to pack your bags and leave for a few years. Okay, like over here in 2018, break the 50 moving average band on a weekly close. It was over for a few years. Break the 50 moving average band on a close in 2022. It was over for a few years, right? And we can even go back to all the way back over here in 2014, right? Break the 50 moving average band on a weekly close. It was over for a few years. Okay, so where we find Bitcoin now is sitting once again right on top of that 50 moving average band. Now, why also is this important? Well, every one of our pullbacks for Bitcoin, as we discussed this, every one of the pullbacks in this bull market for Bitcoin, guys, and I'll put circles here so you guys can see, every single pullback has come to that 50 moving average band, right? Every one of our major pullbacks here in April 2023, here in July 2023, here in this long summer lull that we had last year, and here currently. And you guys can see currently where is Bitcoin sitting right now. Once again, right at that 50 moving average band. We did get a wick below this week, but so far we are still holding above. We have seen wicks below, like over here back in August of 2024 and September 2024. Here we go with a wick. It is a very, very crucial time here for markets, guys. And as we've been discussing, I remain a bull as long as Bitcoin holds above the 50 moving average band, because quite in fact, if you turned into a bear here, you were completely on the wrong side. If you turn into a bear here, you were completely on the wrong side. So as long as Bitcoin holds that 50 moving average band, I'm going to continue to remain a bull. And if we do get a weekly close below, then we can start discussing, okay, it's starting to look like previous bear markets. We can talk about it. For right now, Bitcoin is holding the 50 moving average band on a weekly close. Bitcoin itself, which is the major ingredient for crypto, which needs to be in a bullish structure, remains in a bullish structure on the weekly. All right. So that is Bitcoin. And where I want to go with this is jump right onto our stablecoin dominance chart. And we're going to put everything together here, guys. Everything together of our base case of the total market cap blow off top to 10 trillion before the dot-com bubble rug pull 2.0. Okay. Before we get on to this, though, we're going to jump over here to the stablecoin dominance chart. And I'm going to continue to remind you guys that this zone here between 8% and 8.78% has been major resistance in the past 4 times. Right over here in June of 2021, where we got this 2021 rally. Right over here in February 2022, where we had this bear market rally in 2022, rejection off this 7 to 9% zone. Right over here, we fell below here in 2023, rejected right here at 8% before having this rally in early 2024. We came back up right over here in late 2024 before having this rally into the end of this year. And now you can see that stablecoin dominance has made its way back up into this 7 to 8% zone. And what we've been discussing the last couple of videos is we've been talking about, hey, it's certainly possible that stablecoin dominance can come back up and actually make a higher high and still reject off this 7 to 8% zone like it did on this wick right here and like it did right over here on this wick in 2022. And what did we see? Stablecoin dominance comes all the way up right to that 9% level, and we see a pretty nice rejection candle. Now, this is going to be where this all comes together, guys, because if this, once again, is going to be resistance as it was here in 2024, as it was in 2024, 2022, 2021, what I'm still expecting, and it's all going to be contingent on this level right here holding at about 8.8%, as long as this resistance holds, what I'm expecting is a move down on stablecoin dominance before a massive move up on stablecoin dominance, which is basically the inverse of what I'm expecting over here on total market cap chart, which is a massive move up on total market cap before a massive move down on total market cap. Now, why is that, right? Well, this is a basic Wyckoff accumulation structure where you get 1, 2, you get come down, you make a triple tap of the lows, break the 2 previous lows before a move up. That's your classic Wyckoff accumulation. And what I think we're forming here is a massive Wyckoff accumulation on stablecoin market cap, right? Stablecoin dominance. And that ultimately lead to the biggest bear market in the crypto history. But I do believe what comes first is you have to suck everyone in. You got to make everyone believe that crypto will change the world. Crypto is going to be the next thing since sliced bread. I don't think we've done that yet. And I do think that is coming. And I'll also show you guys a couple different reasons why I also think that's coming. You know, besides the fact of stablecoin dominance being at resistance, besides the fact of Bitcoin being at that 50 moving average band again, like it was in this correction, and this correction. But the other thing we can also look at here, and before we maybe talk about a little fundamentally of why maybe this could happen, even though I'm a big believer in just sticking to the charts, not focusing too much on the news, even though the news is the big talking point right now with the tariffs. But I want to go over here to just the global liquidity, okay? The M2 global liquidity of the world, and just point out that as we've been discussing, the M2 global liquidity has a slight lag on the Bitcoin price, right? So this yellow line here is the M2 global liquidity, and we've been talking about how Bitcoin's price usually lags the M2 global liquidity. Right? It usually doesn't move up at the exact same time, but instead moves up a few months later or moves down a few months later, depending on what global liquidity does, because it takes money, new money, to enter the system, which means it takes a while for it to flow into risk assets like Bitcoin, right? It has to go through a bunch of different processes, a bunch of different hands before it gets into those hands. So we can see right now, this is on I think I put this on a 3-month lag here for Bitcoin. You can see right now that, we just kind of take a look at, how this is correlated over the past is, obviously we've seen big corrections on global liquidity, but what you'll notice, guys, is it follows it, right, with a slight lag. We had big pullback here. Bitcoin didn't do much throughout this period. Global liquidity started to move up. Bitcoin started to move up, right? Global liquidity topped right here, yellow line. Bitcoin topped, pullback. Right? Global liquidity bottomed, Bitcoin bottomed, global liquidity move up, Bitcoin moved up. Global liquidity topped, Bitcoin topped, pull back, and you can see for the last few months, right? This is the last few months, right? Global liquidity chart is forward looking, the yellow line. For the past few months, global liquidity has been shot up and actually has made a new high, while Bitcoin's at the low, but you can see global liquidity bottomed right there. Well, Bitcoin also bottomed right there, and this move on global liquidity to the upside, okay, is what I'm expecting to be the kickstart of this total market cap move to the upside, where total market cap blows your socks off. It also correlates to stablecoin dominance coming down and making a new low. So you guys can kind of see how everything's kind of correlated here, right? The first move is getting global new money into the markets, Bitcoin getting that move up, okay? Getting massive fear in the market at that 50-week moving average with tariffs and all that fun stuff, okay? It's not really fun, but all that fun stuff. Stablecoin dominance being at the biggest resistance that on the chart, 7 to 8%, where we've seen 4 rejections in the past. Could it break higher? Yes, and that would also correlate with, okay, stablecoin dominance breaks higher, guys. That probably means Bitcoin breaks the 50 moving average band, which defeats our thesis anyways. So stablecoin dominance breaks up, Bitcoin breaks down. At that point, we call it, bull thesis is over, right? We flip bear, okay? It is what it is. But for now, stablecoin dominance at resistance, Bitcoin at support, total market cap also at support, right? The same thesis still remains. And, if we kind of want to talk about reasons why this may happen, and, we may look at this chart and think it's ridiculous. And I once again say, guys, a move from 2.5 trillion to 10 trillion, which is the 4236 Fibonacci level, which we've also seen from this bull market high to this bear market low, a 4236 extension in the last bull market. So why can't we do it this one? It's not that big of a move, guys. It's a 4x the market cap. And we already hit 3.7 trillion. So another move to 10 trillion. We're talking about another 2.5x. Not that big of a move. It looks big because obviously this is on log scale, and going bigger numbers is going to make the chart look bigger, right? You guys get the point. But if we want to talk about why this may happen, besides global liquidity moving up, right? Central banks around the world having to put more liquidity into the system because tough times over here in each country's stock markets. Why could this happen, right? Why could this happen now? And I think to myself, I go over here and I look at, something like the NASDAQ and the SPY and, seeing these moves down in the stock market and these aggressive moves down in the stock market. And I got to think that the Fed would have to step in at some point if this continues to happen, right? We've seen Bitcoin hold here for 6 weeks, guys. Bitcoin's held this, mid 70s to low 80s point for 6 weeks, while the SPY in the last 6 weeks has gone down 22%. If we continue to see the SPY go down and Bitcoin kind of just hold here, wouldn't that be the perfect recipe for the Fed to step in and cut rates, possibly even put some stimulus into the market and have this total market cap chart explode? Isn't that the perfect recipe? What I explained last video is I think this is the perfect recipe, guys. Seeing the stock markets crater while Bitcoin holds tells me that someone is sniffing something out. And could Bitcoin just dump here? Yes, but at that point we'd probably call it a bear anyways, okay? Because the break of the 50 moving average has historically meant bear. So once again, it all comes back to our thesis, guys. Bitcoin holds the 50-week moving average. Nothing has changed. Once again, another week where we get a wick down. Okay, that's great. But we're still holding up here, right? Nothing's really changed. We're still in this mid 70s to low 80s zone that we've been in for, since the end of February. We're almost at mid-May. We're almost at 7 weeks of being in this range. So the same thing still remains. Bitcoin holds here. Total market cap holds around this 50-week moving average because the total market cap one is not as influence because we actually did get a weekly close here in September 2024 and then still went back above and went up. As long as we hold somewhere around this 50-week moving average for total market cap and Bitcoin holds on top of the 50-week moving average, it's still kind of the same thesis, guys. All right. And seeing the stock markets implode while this is happening kind of adds some fuel to the fire. And, I just think we have a good setup right now. I think we have a good setup. We have a good invalidation. And my base case still remains this, despite, kind of seem like the world's imploding right now and things of that nature. But, I go back and I kind of look at, times in the past and, when did it seem like the world was imploding or the crypto market was imploding in the past? And, there's been some times, right? We saw, banks explode here. We saw the FTX explosion here. Right, we saw Germans selling Bitcoin, possible World War III all throughout this period. Right, we saw the ETF sell the news event here. Right, and now we kind of find ourselves in this tariff thing, and I kind of look at all these bad news events and all this jazz, and it's kind of funny how where they all kind of end up. They all kind of end up somewhere near the lows of the market. So. You know, I think right now we can look at this with a very simplistic view and not overthink it and say, okay, Bitcoin holds here, all is good. If we get a weekly close below, we reassess, okay? Just based off of historical precedent, okay? The other thing I want to quickly touch on real quick is Ethereum, because Ethereum has capitulated below its, I want to say bear market trend line, but I guess bull market trend line. And we've kind of talked about this in the past, that where we have seen these Ethereum capitulations in the past. Okay, we saw it over here in the COVID crash, where we kind of had this trend line in ETH. We capitulated below and we had a fast recovery. We also saw over here in 2017, we had this trend line, we capitulated below and had a fast recovery. I think something, that is definitely something to watch right now, and I guess is something slightly different, and is we've seen Ethereum capitulate below, but we're not seeing that fast recovery, right? COVID crash, we had a capitulation below, we insta V-shaped recovered. Over here in 2016, we crashed below, had an instant V-shaped recover. But right now we kind of just crashed below, and we're kind of continuing just to be red. So is that just how they want to make you feel, right? Is it, or is there something a little bit deeper? I will say with ETH, I am not as confident in Ethereum, but the one thing I will say is, guys, is, we kind of just look over here for the ETH chart, and I'm completely ignoring. This is not Bitcoin. Bitcoin and ETH are completely different. And if you haven't noticed in this bull market, ETH and Bitcoin are completely different. You cannot talk about them in the same breath, okay? But if we kind of just look at the previous, big, kind of consolidations for Ethereum in the past, and you can see that each one continues to be bigger. We have gone and tested the lows again, right? So in this one, we kind of tested the lows. We went slightly below, but we kind of tested this little long consolidation here in 2016. And then we had this bear market consolidation here. We actually came and made a slightly higher low, but we almost came back to the lows. The question I asked myself here for Ethereum is Ethereum that weak where it could possibly come down and test these lows again? That's what I have to ask myself. Could it come down and test all the way back down at somewhere near the lows like it did in this consolidation, That's something we have to find out. And I think it's really going to depend on Bitcoin. It's really going to depend on Bitcoin. So Ethereum's a completely different kind of animal right now. It's just weak compared to the rest of the market. There's altcoins that are significantly stronger than Ethereum right now. So I'm not going to spend too much time on ETH. But the one thing I'll notice is each time in each bull market, before we really had that massive rally, we're talking the massive rally like here in 2016, 2017, and here in 2020 and 2021, we did see an Ethereum capitulation, right? So are we seeing something similar where we're now getting that Ethereum capitulation somewhere in this zone where it could be a higher low like it was over here in 2020 or a lower low like it was over here in 2016? Somewhere in this region is the Ethereum capitulation going to be what sets us up to finally get that bigger impulse on the crypto market. And I think that's another thing in the pie that we can say, okay, this is what happened in the past. It doesn't have to happen again. Ethereum could just keep dipping down and be dead forever. But this type of move, along with Bitcoin holding the 50-week moving average and moving higher, would be what would get total market cap up to that 10 trillion point. And I just think everything's coming together here for this to happen. We got massive fear in the market. We got bearish catalysts, right? And we got stablecoin dominance at the big resistance, finally going up and testing, making a higher high, like we talked about, could happen at the 8.78% level. Bitcoin coming down and swiping the lows, still holding the 50-week moving average band. Like we said, it could come back down and test it again. It has. I just think everything's kind of setting up for the move that we're kind of waiting for, guys. And it has had to take some patience. And nothing's guaranteed. Like I said, I'll be the first one to say it won't happen. If this 50-week moving average band breaks, I'll be the first one to come on here and say, guys, it's not looking too good. It's not looking too good. We have to reassess here. All right. But as of right now, as we talked about on Friday, I think we're, relatively not too far where we were from Friday. At Friday, we were like 81,000. Now we're at 80,000. We're not too far away. Nothing's really changed here in the grand scheme of things, guys. Keep your eye on the prize. Focus on the weekly charts. And the day-to-day volatility, especially because of the stock market, is just going to keep being insane. Don't let the Ethereum chart cloud your judgment on the rest of the market. And we'll go through this day by day. All right. So same thing remains, guys. Bitcoin above the 50-week moving average band. I remain a bull. It's as easy as that. And let's see what comes here next, my guys. All right. So thanks for watching today's video. A little bit longer video today. It's been your boy, Jordan Cameron. Smash that subscribe button. If you're new, we hit 80,000 subscribers. Thank you so much, guys. I appreciate it. You guys are the best. Thank you for everyone new who's coming and watching. I hope you enjoy the videos. And I try to back up my thoughts with the charts. I don't just try to talk about what I think is going to happen, but I look at the charts and what's happened at previous price points and resistance and support levels, and try to back up my thesis. And just to remind you guys, I am not a perm bull. I do think a massive bear market in the crypto market is coming. I just don't think it's coming yet. All right. So I'm out of here, guys. Peace out. Much love. It's been your boy, Jordan Cameron. Later.